All right, so we've gone over this already, but as we get closer, we've gone through the options, we've gone through the analysis, and now we have to start putting it all together. And what we call top-down analysis, which is quite literally exactly what it sounds like, and exactly what I've been telling you guys, right? And so I'm going to hopefully walk you guys through what we're looking for on each time frame to make our life a little bit easier and come to simple conclusions, or as I like to say, drawing lines in the sand. Definitive, this is what, if this is broken, this will happen, right? Definitive. And being able to say that oftentimes will happen clearer on higher time frames. Also, weekly floors will reject, weekly bottoms will bounce. So, weekly provides some of, if not the strongest and most reliable targets, right? If it's clear. So, we're looking for a couple of things on the weekly. Candle opens, right? Where did you close? Where did you open? We also want to establish trend. Where is the overall market or the overall stock moving? What direction? And of course, what is above and what is below. So we don't have to go through a bunch of these, but we'll really quickly do exactly that. Now let's see. So we'll go ahead and do this, right? And we'll do it on stocks that some of them have already moved and some of them have not, but we just did it here, so we'll repeat ourselves. For Disney, right, for top-down analysis, I am not able, well, actually, I take that back. I am able, I think, to place a large downtrend, which we can say that trend has changed, right? You were in a strong uptrend, you lost it, you regained it, and now you have lost it. You have now spent since June of 2022 inside what I would call a range. On the monthly, yeah, a box, right? Now you can start to see kind of how strong those levels are. Those wicks right there at 130. Monthly, a box, right? But on the weekly, our resistance and our overhead we're in need of a candle close there would definitively be, and I am okay with going ahead and dropping that on those two candle closes right there, since it shares that similar control over to my left. But you would have to, on a lower time frame, be advised of those 123.90s without a candle close outside of them or up against them. You'd have not a guarantee. The target would be here on Disney. And underneath us, right, what have we left? This helps us provide a, oh, it's over type shit right there. I'm just kidding. But that helps us provide us a, okay, well, if it falls underneath, that's where we're likely to go. And we're done. We're done. Why? Why wouldn't we need? Because there is no need to overcomplicate what is already consolidated for you. It's consolidated for you by giving you a week's worth of confirmation. So I rely heavily on simplicity inside of these higher time frames. Now dropping down to the 24-hour, of course, we've already discussed this as well. That same level that I just showed you, the control, god damn it, everything is always tied together, my friends, is your 24-hour cost basis. Now let's say it's Friday, because it's about to be. and you close up against 122.25, which on a 24-hour time frame would be beneficial. But on a weekly, how would that look? That would be a solid green candle close against your weekly control. Pretty cool. So that would allow for me to say, again, what is above? Now we're on the 24. And what is below? Adding even more extra protection. Now, what is cost basis? It's your previous resistance. That same mark I told you that we would fall. Beautiful. So now we have the basic concepts of a plan. We go over to our left. I am always I would say a little weird about resistances that do not have boxes because they typically are going to reject you. First try. But here's the good thing. If you do, if you can, make it to that target, you would have an instant area that you could rely on to hold price up. For a stock like Disney, do you ever think about other factors? Like Disney is probably busier than doing more business right now with summer travel. You could have said that for the last couple of years. This is October, going all the way into March. Bad time for Disney parks, rips. Going into summer, dumps all the way to September. Winter, pumps, right? Here, going into midsummer, now we're pumping. But no, I don't. I don't. I have. I concede that the market makers are smarter than me because not because they know uh, the analysis better, but because they have the information that moves the shit. They know, right? And it's always in their interest to make sure that the big dog makes money. And there's big dogs in here. All of these pumps and dumps right here, those are big dogs. And I have a feeling, guys, if I'm being honest with you, I have a good feeling that we'll end up probably around in back in the 140s. We've had enough time here. But ultimately, even disregarding my channel, I have zero doubt that'll fill right back up. So equity people, or that's, I mean, God, the amount of time you would need on this, I would add 2 weeks per, weekly is like two, you'd have cost bases here, and you'd have to go at least 6 months out with everything that you have in between. You just taking a rough guess. So yeah, I mean, that's a good point, Hank. They have movies, merchandise, there's streaming services, which I've heard just lose the money, um, but anyway, that is how and what we're looking to establish when we go to the weekly time frame. And of course, we can correlate that with the 24, which is also equally strong. I'm going to say this, and hopefully this is, write this down if you haven't already. 99, maybe 98% of the plays that I take are rooted in those two time frames. Do I use the lower time frames to figure out certain problems that I'm dealing with? Of course. But 98% of the shit that I trade is going to be based on this. I would say a good 99% of the 1,000%, 1,200%, the ridiculous percentages that I've made 40,900%, those came from 24-hour setups, weekly setups. I've had some big trades off of lower time frames, but I can always go zoom out and see why it's typically tied to some sort of 24-hour move. All right. I me just a second, guys. Brief intermission here. All right. And I don't know why I put daily, but 24-hour. All right, 24-hour trend. And this can be different than what the weekly is presenting. In a weekly uptrend, and as you can well, we just saw that, right? We were in an uptrend here and a downtrend here. It was the second class in the, or the, it was like the first class that we taught, and Hamilton goes over that scanner. There's a link in there. Um, this can be different, and this can determine how you play. Now, if you see a downtrend and an overall uptrend, unless that was to break, you're going to probably get more out of the resumption or of the uptrend. So when you hit that support or when you break that lower time frame downtrend, so weekly uptrend, 24-hour downtrend, I bank on the weekly uptrend to resume to give you the bigger move. Candle closes and opens, right? We're looking at what is above and what is below. Where is trend? Like, where are we in, like, looking, like, if you're looking at a channel down, are we coming off of it? Do we have one above us? I actually traded this, I remember. So lower time frame channels, control. And again, we're looking at what is above, what is below as far as Potter boxes. Confluences and imbalances are going to be important, right? These are going to be more apparent on the 24th than they would be the weekly. The weekly, we're not really adding all that much, right? Let's look at Tesla, actually. Come back to this one. So let's do this right now, right? Let's go ahead and do some top-down analysis on a fresh Tesla chart. Okay. So we're going to go ahead and establish a few things just to kind of get the story in order, right? This is where you came from. This is what you just punched out of, right? There is a range clearly up here that is not a box, okay? Not a box, is a range, does have the similar impact, but not signal, okay? Okay. Now, confluentially or channel wise, we're going to go ahead and establish our channel. And again, we can use points of contact to help us kind of solidify said channel. So we are currently in a 24-hour uptrend, but we can observe on this 24-hour that there's likely going to be a lower time frame downtrend, right? I'd probably bank on it being off that, but anyway, so we do have what appears to be a 24-hour downtrend, or a 4-hour downtrend. So at the moment, right, that's about where I could leave this chart. But like just line wise, but this is where we establish what is above and what is below. Above us on Tesla, to go up, you would have to pop out of 333.23. Plain and simple, right? Now, I typically would take the distance in between here and literally you're aiming halfway, right? Just off the 24-hour, I'm aiming halfway in between this big pop and dump. To the downside, right, I have my floor underneath us, which I guess I can scoot that up just a little bit right there. I have a 312.26 floor, and that's what I would be anticipating a break to. Now I lack structure here, right? And I really only have this large box underneath me. Now this could actually play out to be a pretty sick play if we were to dump, right? Go back down here, maybe wick off of some similar areas and get that seller tension back in and ultimately pop that back up, right? Where we could have a nice confluential target. And that would be, actually, now that I'm saying that, that would be something to mark out as a potential confluence between the up and the downtrend. And you could say between a level that we've bounced off of previously. And that's about it, right? Now, would this, if you were going to trade something like this, would this require lower time frame analysis? You bet your ass, right? Because if I was a betting man, which I think that's literally my job, except for science or math, there is empty space up. I would bank on price escaping quickly, quickly up, and then pulling back in. Why would we want to do this? We would want to pull the volume out of the center mass, weaken the wall, pull the volume, and use it to bring price back up, expending it, and then driving price back down. Professional odds beater. There you go. So, again, this isn't the best setup in the whole world, but that is how we would do our 24-hour. And then using, like I did with the weekly, I'm using the direct 4 hour, right? I'd use a 24 hour, so I'm looking at the 4. I'm looking at the weekly, so I'm looking at the 24 hour. Kind of correlating them back and forth to find, like on Disney, similarities there. Sorry, fingers, you do whatever you want. All right. Let's do that one more time. All right. So let's backtrack here. Let's start with Pepsi and let's look at the weekly, right? On the weekly, which is not looking great now that we're looking at it here, this is worth a shot, but we are not able really. I think we can use my eyes inside of a box in order to establish the range, typically gravitate towards either multiple wicks or where the candle closes. If a wick pops off of that candle close, that's my target, or that's my floor. Now I'm going to go with where these three wicks are bouncing off of at 129 and go ahead and be, I would feel good about that being my target or my floor above us. So this would make, if we are not to bounce tomorrow, this would make a potential candle close under the box and potential downside signal. But we've established our box, right? I don't really know if it's worth trying to establish trend on this one, but we could try. Might as well. Okay, so channel, right? The channel has more points of contact here. 3 off the top, multiple off the bottom. Um, and I think that would absolutely factor into a potential price target up above us, probably at the imbalance or 50% mark of this weekly wick, which would be 135, but irrelevant. More importantly, weekly, bottom, that's our floor, and top. Now we can measure at what is underneath us, and I actually do see a couple of pretty strong levels. You have a wick underneath you here that we've bounced off of multiple times. And then you've got a gap at 124.60, right? So those are two targets that we could see Pepsi move down to. And that's about it, right? I could look at what's up above us, but we're not quite there yet. So I'm going to move down to the 24-hour now. Now I can see that what was true on the weekly is still kind of translating to be true on the 24. We do have a green candle here, absolutely establishing today, God damn it, absolutely establishing today that 129.21 is where you go back up. So now between the weekly And the 24-hour, we have perfect cohesion. I'm pretty sure my chicken just escaped again. Whatever. Darwin, I guess. Um, Now one thing that I do want to do here is adjust, right? That looked okay, but we could do with bringing this up, right? Right about there to 132.50. And no, we're going to leave that exactly where it's at. So on the 24-hour, we now can say that 129 in correlation with the weekly is the floor for Pepsi. Pepsi also likely has a little channel here that would probably allow those price targets to go and get hit, right? That's lower time frame control. Again, we're part of a much larger trend, but this thing seems to correlate pretty damn well all the way across the board, right? That right there is enough for me to go ahead and say for fucking sure when this channel breaks up, you can go ahead and start targeting that empty space up above you. Okay, so in the 24-hour, right now, we have a wall above us at 132.50, cost basis at 131, and a floor above us at 129.18. Directly above that box, we have this one, right? Now I'm going with the top red right there, and the multiple wicks off of the bottom. Cost basis is at 134.13, my floor is at 133.21, and then my top is at 135. So the green candle for today confirmed our full, yes, absolutely. 100%. Where did you bounce off of? The wicks, right? You bounced off of it a lot. What stopped you? What stopped you from going back up? 129.21. They're at the floor and sellers pushed you back. Did they do their job? Not so much. And they have the weekly candle to save. So tomorrow will be a big day for Pepsi. Because if not, they're going to have to go find their buyers, right? And those are below us. So if it gaps up, reclaims. If it gapped up, yeah. If it gapped up, I would expect it to wick down, touch that floor, and then pull itself back up. And then, yeah, I would look at, I'm looking at these red candle closes right here, 131.16. So that's probably where we're going to end up seeing that break. But ultimately, we can see that all of these wicks are actually bouncing or pushing off of 133, 133.18. Look at the 4-hour. Okay, now we have to change that up a little bit, right? So the same thing that we're doing on the 24-hour, but now all of a sudden it kind of makes more sense to bring this down. And now, hold on. What do we see, guys? Everybody, I want everybody to type it. Don't hit enter. Type it. What do you see right now? Don't hit enter. Just type it and everybody hit enter at once. Crash the fucking Discord. What do you see that could allow Pepsi to go back up and reclaim that floor? Hit enter. No on the confluence. Imbalance. So right now, no. Alex, you're correct. The way that you just dumped, there you go. The way that you just dumped is how, yes, you dumped fast. Let's investigate. Oh, delicious. Oh shit. Oh my God. What more could you ask for? Do you see how we just went from having a problem there to having a solution here? Come on, man. Come on, man. Joe Biden, come on, man, right now. So boom, 128.88 would be the 15-minute candle close in order to break outside of this box and try to go and take advantage of the empty space. You would need to clear the wick at 129.14, of course. It's funny enough, looks like there was a box right here. You punch through it, pop down through it. It's got empty space on both sides, but that cost basis was the floor right here. But regardless, that would allow. Let's go. Hold on. I'm not convincing you guys yet. A little choppy, but you did it, right? Similar situation, right? So now what? Do something. No, just kidding. That's what we're looking for, right? That's what we're looking for to allow for price to go back up. Now, what is there truly to stop you? Well, what'd you reject off of? You built a little baby box around cost basis in pre-market and lost it. So while this does have a difficult journey ahead, that just made your life a whole lot easier. Even if you dump, oh my God, if you dumped, even better. Even better. Does this make sense to everybody? Lower time frame empty space matters. And because that empty space is likely to get filled back up, that's likely where we're going to see price retrace to. Does that make sense to everybody? Now, we can and did, by just marking out the top of this wick, solidify everything that we just affirmed on the lower time frame. So in order to establish this, 129 right there, look at that. In order to establish this back up on the, it is a barcodey stock, but dude, I mean, it also has its moments of greatness, and it's typically always empty space that fuels it. Look, look, guys. I mean, like, this has been happening before we were born. That's not before we were born, but you get what I'm saying. There's definitely people in here who were born after 2000. Let's test the boxes in 2000. Still works. Could you almost scout swing after? You could, but I mean, those contracts aren't going to really reward you too much. You really want to break that range. The candles change. You can tell people are buying that shit over the phone and on their computer. Let's go through its periods of range. That would be one of the only ill fates that we could meet. Man, fucking back here. Usually a button that pops up that tells me I can go back up to the future. All right. All right. BlackRock took it away. Probably. All right. Let's see here. All right. And if you guys have any stocks you want to recommend as we go through this, that's cool with me. All right. So you're going to do a lot of repeating as we get down here, right? The 4 hour, we're looking for trend and trend, right? So you can see from the previous example, that we had a downtrend on the 24-hour and we had a 4-hour uptrend, right? You can put all of these together um, and track price up to their potential rejections or know that it's not the right time to go short. These are risk management tools. Candle closes and opens. These are going to matter as well because typically structure is going to reflect the higher time frame. We're looking for bounce levels. We're also looking for triggers above and below, as well as confluences and balances. And now we're typically using price action to gauge, right? How? Because we can do that as we start stepping down to the 4-hour. We can start to see how price action is moving a little bit better. And again, are we in range or in between? Right? These are questions that we can kind of help establish as well on those that 4-hour. Now the 2-hour, this is a precision time frame, and you can start to see the difference between this and that offers those day traders the opportunities that they typically look for. We're looking for trend and trend. In this case, trend tracks the 4-hour, so the 4-hour trend is what we are trading off of. Candle closes and opens are also relevant and important here as well, right? Bounce levels, Potter boxes above, confluences and balances. And at this point, a trade plan should be formulating, right? And I feel like we have gone through some top-down analysis pretty much for every class. And so you guys have seen how we start, well, just even with Pepsi just now, right? You guys are seeing how we're able, oh shit, how we're able to put that together, right? So when we went down and we looked at Pepsi on the 24-hour, right? We get a bit of, okay, that's the floor, that's where we need to reclaim. On the 4-hour, we see that it's accumulating to possibly go and do that, but has faced a rejection previously, and we can tell where it's being held down underneath, which was that previous floor. We also can tell by going to the 4-hour that there's starting to look like there's a little bit of empty space up there, right? Go to the 2-hour, and now all of a sudden, I can see those candle closes, right? Smushed down on that 128.50, right? I can see that. As I go to the hourly, that correlates, translates. So tomorrow, I don't know why the fuck I had that so big. Tomorrow outside or opening outside on the hourly or 2-hour, right? So think about this, right? You gap up tomorrow. How does that show on the 24-hour? You're going to have a weird ass candle right here, right? You're not going to be able to really tell what the potential is behind that. So if you were to gap down, right, you would have structure underneath you to help you bounce off of. So let's say we gap up right here. You're met by your first resistance, which is that wick, and price retraces, right? You fill your gap, you bounce. This now has been hit 2 times. That would make your third. And that's where you would be looking for that candle to be reclaimed to your left, right there at 129.37. And that's where you would look for the remainder of that empty space to get filled up. So we go back to the 4-hour or the 2, and that's where we can start to see that trade plan formulating, right? Now, what hour? That's how we get there, right? This is an intraday trading level, bounce levels nearest, Potter boxes above and below. But this is the half, this might be more, this is, God damn it, it's so important. This takes what the 24-hour is trying to show you, but provides the structure that the lower time frame is building to get there. It is the perfect halfway point between 24-hour and 5. I can still see my structure, right? But I can start to see what would need to happen on a lower time frame in order to make that happen. An hourly candle close outside of the bottom of this box, right? This is where most of your intraday targets that would be lying in front of you would be able to be identified inside of ranges. And also just as far as breakouts or uh, punchbacks and finding problem solving to find out where that 24-hour setup moves. The hourly is going to be of great use because at the top of a box, or in this example, right, we could go and say at the top of the box on the 24-hour where 133 needs to break, an hourly candle, check this out. We have a lot of rejections there, but we also have this wall here. Do you see this? That would offer, and that's actually your imbalance in the wick, but that would offer me, right, another opportunity to either A, know that my trade is good and set a stop loss trailing behind it, or if I missed the first entry down here or, outside of this 132.50, then I would be able to use that, right, as a potential entry. A candle close green up against wicks. Wicks are not typically control. Now, in this case, you have multiple wicks off of the same mark, but they're almost all of them are wicks. So control is established by candle closes, right? That's control. Wicks are where they set those fat orders, but that doesn't mean. So if I was to close green in here, that would show that where we rejected, which is not control, we are outside of control. So if you were to close green in these wicks, I would venture to guess you are going to continue higher, right? But here's something else that the hourly is giving away as well. Remember I said every pocket of empty space matters? Here's how we can problem solve the box above us, right? Now, this is not a box I would identify on the hourly whatsoever. I'm doing that for an example here. On the bottom of that box, what do I see? Is that likely to get filled up really quickly? Yes. Yes. What is that? Right? That is a box. This would allow for, hold on, follow me. This would allow for price to move up rapidly, hit cost basis, but in the same time, secure that 24-hour floor. Does that make sense, guys? Is everybody following me there? Inside of that box, that's the extra detail. Because you dumped fast, and that is the most recent price action. If we could break outside of 133 and reclaim that floor, you would have an easier time making it to cost basis because of how you left. Cool. So the hourly is giving us the details on how to make the 24-hour weekly 4-hour. How does that get set in motion? I'll give you an example on snow. What a perfect retest on snow. Is crazy. So snow, first of all, on the 24-hour, we accomplished hitting my range target. I mean, to the literal penny. To whoever bought that contract to, I'm sorry. Take a look at how, all right, I just showed you this example. I'm showing you it in real time now. Well, in what was real time. Do you see how you dump? 1, 2. So what is price able to do? Pop up, hit that target, and it doesn't matter how hard you fall, right? It matters where you fall. You bounce right off the floor. which actually does give snow with that kind of bounce the potential to maybe go higher. Right now, you've shown that the ultimate control is absolutely at 221, and that's established by the 4 hour, right? The 2 hour shows that that median at 223, that's what we would need to go. We need to raise that up just ever so slightly. That's a range, not a box, but it is a range that stopped you at the 50% mark. And right now, you reclaimed that floor. You would need to punch through the middle of it, right? Or move through the middle of it where you would have resistance here at 224.75. And if a candle closed outside of it or up against it on the 2 hour or the 1 hour, right? Now watch this. Hold on. So I go down to the 1 hour and all of a sudden, now I have even more detail. Now, why is this good? Why this, in my opinion, gives me peace of mind. Peace of mind. That is a floor for sure. The hourly, while the 2 hour had more of a wider range, now when I go to the hourly, I can do a better job at problem solving. That's what we're trying to reclaim. That's what we did reclaim. That's what we need to break, 224.02. And that's the target and potential trigger for the rest. Hold on. Oh, the rest of the empty space, right? Because there is some likely going to be found above those wicks. Right there. What's up, Jay? I can't see your guys' names. Some of your guys' names. So top-down analysis, 24-hour weekly is helping us establish what that play is, where that play is likely going to go, and we're doing it in a simple form. The 24-hour is a little bit more refined and more up to date with what's relevant now. We had a couple layers of complexity, which isn't really complex, with confluence and channels, boxes above and below. And then we typically, once we, and again, we're not top downing on a shit that looks terrible. So if you get to the 4 hour and you're like, this is unfucking believable, I can't, then don't. Walk away. There's too many fish in the stock market to get stuck on one. If it just doesn't look good, or even if it just doesn't make you like you're like I don't know why, but there's something about this setup just makes me feel uncomfortable because I have a strategy and I know what I'm looking for, and that's not good. Now, when you have that moment, and a lot of you guys probably already have, where you look at a stock and you don't really even need me or anybody else, you're like, yeah, that's the fucking one. That's obviously one of those benchmark moments, is when your brain responds to a setup positively without having the reward of cash, because you know that's the potential outcome from identifying that. But so we're using the 24-hour, refining what we see on the weekly, and then the lower time frames, the 4, the 2, and the 1, are going to be used to formulate how that like, yes, we can just take trades based off of 24-hour candle closes outside or underneath the tops of boxes or the bottoms of boxes or whatever. But if that is something that's coming out of a box, right? I mean, I would even go as far as to say is like Nike. Nike's something that, doing top-down analysis. The 24-hour is really clear, right? But the 4 hour just gives me that extra, okay, you came back down, you filled a gap right there. The control is still right here. You can see that box builds underneath it. Gives me that extra. And then now, holy oh, we're money, boys. Yeah, we're gonna have a wild time tomorrow. I'm gonna be lit. Just to let you know, I'm gonna say words that I probably shouldn't say. Oh man, we tapped my target, motherfucker. Right on the dot, guys. Right on the dot. Damn it. That's a good looking dingus. You guys are correct. That's a model dingus. All of us should look at that dingus and all. 70, 90. Man, I just want to celebrate it. Nike's in the bag, man. I think we're good. I think we're good with the way we closed. I mean, but fuck, dude. It just makes I love what I do, dude. Makes my fucking brain feel good. All the ideas in my head used to get me in trouble. Now they make me money. All right. I'm sorry. All right. So, yeah, we just made basically the same movement right there. But all right. So, top down analysis, we'll go ahead and finish this up. The hourly is going to be the problem solving. It should make what is not clear on the 5 clear, what's not clear on the 24-hour clear, and we can refine our play from there. We should be able to pick out our targets, right? A trigger should be set for if that lower time frame trigger that is going to trigger the higher time frame goes off. Is IWM moving up? No way. Uy, muy guapo, Bobby. That's the soundboard. That's good. You're gonna pull back though tomorrow morning. We don't want to go back underneath 215.41. Okay. Yeah, that's gonna be good. I'm excited. If we can build a box in here, retest that, and then be up above 216 tomorrow, I will be a happy boy. We will be happy. My chickens did get out, and I can hear she's screaming at me through my door right now, my window. All right. Now, last one. That's crazy. Last one. 30 to 1 minute. You are basing your trades off higher time frame analysis, but this is done live. Intraday, while price is moving, you can prep using lower time frame, but may find yourself confused if you do not have higher time frame set. So the higher time frame, right? Let's look at the channel that you see before you, right? Look at the hourly there. You can hardly see that. Now you can actually see, right? You can see the box up here. Hold on. There's a box here, right? There's a box here. And so we could see the details that we need to see to know whether or not that range right there could be broken, right? So we would have to break this lower time frame downtrend, break above that box, and this one. And that would be something that we were able to solve on this. I think this was the 5 minute time frame. That's something that we'd be able to kind of not even solve, but observe, because the hourly should obviously, or the hourly or the 30 minute would obviously make that clear as well. I do not hardly fucking ever base my trades solely off of something that I see on the 1 or the 5. Now, when I traded futures, it was the opposite. The higher time frames did matter so that I wasn't trading in range, but it was the lower time frame pockets of empty space that I focused on trading, because that's where I knew price would move quickly, and that's where I wanted to pop in, pop out, be done. But with this system and the way that I trade, obviously a little bit different. That tip you gave about having 4 time frames open for one stock on the same page made it so much easier to see the whole picture. I would highly, yeah, that is, and I hope the AI takes notes on that, because that is going to be I mean, that's still literally a tool. And there's dorks out there that obviously have 5 computer screens, right? And that's all for show. Like there's some dudes who like were stockbrokers and it's like they want to be able to see everything. Like they just want to see it. But as a necessity, it's not necessary. But extremely helpful, right? To have multiple. If you have two, I have three monitors, but I also am streaming. Two of those monitors, I'm actually admittedly getting a fourth because I want one just for the brokerage. But that's I have two charts, two sets of four typically charts. This is small. Usually on the other one it's big, and I'll have it something like this, right? And if I'm trading IWM, then I'm on IWM here on the 4, right? Looking at in greater detail. Look at the difference between the two. Sorry, I'm having to constantly readjust the screen for OBS every time I do that. Right? I got IWM on the 2 hour. Now I can see, look at this little detail. Bam, and it correlates. Bam, 4 hour, 2 hour, good candle control, right? We know that's where we could bounce off of. And go over here, IWM. And if you have a good setup, that's what you need to do is focus on that setup. Now we can go to the hourly. Fighting with cost basis right now, right? And theoretically, we could also go to like the 15 and see what that looks like. There's our box, right? So we can, this is literally problem solving. I can see how this, right? The levels that I see in front of me, everything is still true, guys. My system is adherent to this time frame too. So look, candle close underneath me, right there. What significance does that little line have, right? Oh, I don't know. That's the bottom of your green candle. That's what you launched off of or opened up on today. And typically, when you lose or close below the previous day's open, you can expect a pullback. And then we see, well, what's underneath that? Mostly empty space. Okay, well, I don't really know how to deal with something that looks like this. That's fine. 5 minute. Okay, that's still pretty scary, dude. Well, fuck you. Sorry, not fuck you, but fuck it, right? Now we'll go to the 3. Is that scary? Could be, but we're going to draw our ranges. Ah, now we have an idea. Bam. Do you see that? Problem solving. These could be just epiphanies that I'm having, but that translates to this. I can tell you right now that I'm on the 3, I'm starting to see it give birth to a little channel. So tomorrow, if we can stay up in this range, I would imagine pop down, pop up. How did I find that? The 3 motherfucking minute points of contact. Top, I don't know, bottom, top. 3 minute time frame. Is it always required? No. Can we use it to solve problems that we're trying to solve on the higher time frame? Of course. So, and I said 216 there, 216. What is that? 216.25, 216.50. That's 50% of this big ass green wick. It's 216.50. So we can use the lower time frames, find the connections between the higher time frames, solve problems that way. But what you don't want to do is confuse yourself. So systematically step down, right? I'm having to stop and explain myself, which, that's fine. But for you, you should just be able to write down or come to simple conclusions as you step down in between each time frame and end it at that. At that point, right, once you've come up with a solid conclusion as to where you want that to go, that's when you're starting to look, and before you take that play. You know, once you go to the 24-hour and you've established, okay, my target is here, then you go look at those contracts, right? If it's something that you can measure out on the 24-hour, you know, find your contract prices there, and then you can find your potential entries on a lower time frame. All right. So that is pretty much as far as top-down analysis, and that's something that we're gonna, you know, I think we'll probably spend the last class going over this stuff, going over some of the trades that you guys have taken, um, and some trades that we want to take in order to do the same thing. I think taking one on a stock that we have yet to, are doing this on a stock that we want to take, which is what the last goal is. We're going to use this little small $500 account and find ourselves a good play together. Now I'll give you guys some time, right? Probably a couple days for you over, or more than likely over the weekend, to go start going over the material, and then we'll meet back up next week, and we'll go and we'll search the market for, and I already have a watch list, but we'll keep looking. I encourage you guys to do the same, and we'll see if we can't find a play. And also, you know, there has been a lot of expansion in the market, so it doesn't matter that we just finished this. It doesn't matter that I'm showing up now to look for a $500 play. It might tell us through top-down analysis and through all of everything that we do that that play is not ready yet, and that will also be a part of that lesson. Is when we need to be trading, you know, and where. So, all right. Does anybody have any questions on anything that we have covered tonight so far? How's everybody feeling about everything so far? I know a lot of you guys are overwhelmed. I know some of you guys are coming back to the table much clearer. Awesome. Feel like we're not letting behind or leaving behind anybody. So, for the most part, more confident. Okay. Excited? Good. Good. Be excited. Funnel that into some good ass setups. While there is layers to this, I think in concept it is simple, which means you don't have to be. Simplicity is, you know, doesn't always mean it's ripping every day. It does mean that, and that's going to be something that we finish up talking about probably the next time we meet, you know, about being patient. And I think we talked about it in some of the last classes, and AI did a really good job. If you guys have not gone over, I think most of you guys have, but if you have not gone over, and I would ask everybody in here, is everybody signed up with this? I'll go ahead and post the class link right now in the chat. There it is, and in the class chat. Make sure you guys sign up with that, because I see everybody in here, and I can see your test results. The tests are, you know, again, still in the works. I think, you know, but I mean, as far as it is really, really impressive. So let's see here. Yeah, I wanted to kind of point out something. Yeah, so I want a daily routine, right? Each morning mark pre-market highs and lows. Highest resistance above, nearest resistance directly below. Boxes above and below. Decide stop, which means what invalidates your trade. First two profit targets at the open, right? What is directly up above you? Or, you know, I was talking about the upside, so it could be downside. Reassess after any large gap up, right? A trade life cycle. I mean, this is cool. Ideal candle open or close outside of the box above a floor. Early entry is allowed only if floor is used as hard stop. Management use intraday levels 515 to trail stop once in profit, right? Trim into first structure, leaving runners for remaining vacancy. And exit, primary target, opposite side of empty space. Trade is officially done at that point. All extra holds are discretionary runners. Top-down analysis, which again, I didn't even truly go over it, but it did it already. But monthly is typically when we do those at the end of the month. We're getting close to that right now. So we'll go and we'll look for those monthly charts and come up with some simple answers for them. Weekly, every Friday, tomorrow, right? 24-hour, that's something that we're looking at every day, Monday through Friday, Monday through Thursday. 4-hour, 2-hour, 1 hour, these are obviously discretionary for whatever we need them, whenever the setup calls for it, whenever we need to zoom down. Look at that right there. The future. Risk management, stop level that once broken close proves your thesis is wrong, usually provides floor or cost basis. Think of rock climbing. Once the hand hold snaps, you let go. I don't like how they worded that. But yeah, seriously, I mean, for note taking, this was top notch. And I really highly recommend that as you guys are watching through the videos, that you do that. And I think it's given us, oh, there it is. Yeah. So this is the raw version. That's exactly right. Um, it is really cool, guys. This is really cool. I'm really happy with it. This is was the class just on boxes, right? Draw boxes on 24-hour, mark top cost basis and floor, ask what's above, what's below, confirm empty space and intended direction, make sure upcoming events, earnings news provide juice but do not contradict the technical setup. Define yeah, is that right? Invalidity before entering, right? Invalidity, whatever. Only takes trades when stop aligns with structural level. So, and this was perfect. Open above cost basis, target resistance, open below floor, open below cost basis, target floor, open on resistance, target our first pullback usually to cost basis, open on support, first push usually to cost basis. And that's inside of a box. But all right, cool. All right, so from now, as we close these classes up, this is not the last one. We're going to do one more recap class to finish this up. I encourage all of you guys to go out and for the next month, repetition, repetition, repetition. The money will come, but the being sufficient and being sufficient and being able to move within this strategy is going to rely on your ability to be able to identify a good setup. And once that is the ticket. Okay, folks, it's not the other way around. The market does not care if you need a fucking kidney right now. It doesn't care. It'll take the other one and laugh at you. So refine what you know now to fit the mold, to be able to find and identify solid empty space consolidation. And remember that you are going to have to wait. There's going to be a lot of patience that's involved with a lot of these setups, but that's okay, right? You know, if you saw Nike forming on that second wave right here, you still would have had to wait over a week and a half to take that trade. But is it worth it? I think it's going to be. So hopefully this Potter box and workshop has been a little bit more helpful for those of you guys. You guys should be able to hear me, right? Can you guys hear me? Has been a little bit more helpful than some of the ones that I've done previously. Felt like I didn't want to push people's time too far. I'm not sure that's doing that thing again. Uh-oh. Oh, you can hear me now? Okay. What's the code? Send that to you. Okay, good. Um, There we go. Good to go? Okay. But anyway, I will post this. I forgot what I was just saying. I will post this as soon as we get off. I'll upload this onto the Google Drive. Actually, we'll go ahead and stop recording here in just a second. Code me. Yeah, I don't know what that means if I'm being 100% with you. I don't know how or what that is. Don't look at my account. Yep, I'm gonna go ahead and pause that now.